Bitcoin, very simply, is a far better risk-adjusted investment today than it was when I found it in 2016. Why? The response to the
Hello everyone and welcome to the Daily Crypto. We are back with another educational video for you guys to enjoy, and this time we have Greg Foss with us. But before we can get started with the video, let's take a look at the Fear and Greed Index for today. As of recording this video, it is sitting at 33, which is a massive improvement from yesterday's 20. Currently Bitcoin and Ethereum are trading for $20,777 and $1,546 respectively. With that being said, let's jump right into the video.
The reality that we're based on a credit-based system perhaps is, in my opinion, most easily explained from a global perspective. And total debt in the world today, according to the Institute of International Finance, is over 400 trillion US dollars equivalent. So that includes all government debt. It includes all corporate debt, all bank debt, all mortgages. 400 trillion US dollars. I'm sorry?
Without unfunded liabilities.
Okay, without unfunded liabilities. But stick with me here. This is the amount of debt outstanding in the world. And round numbers, the global economy is only 100 trillion US dollars. Okay? So your numerator is 4 times the size of your denominator. If you assume an average coupon in your numerator is 3%, do we think that the global economy can grow at 4 times 3%, which is 12%? Do you think global economy can grow at 12% in order to keep pace with the growth in debt, the organic growth in the debt due to the coupon? And I think the rational answer is no.
The current credit situation is so bad that the total consumer debt as of now is more than $400 trillion. However, the total size of the global economy is just $100 trillion. This shows how overly leveraged the system is and how big of a risk it poses.
So that in itself is the inflation component of the global debt GDP spiral. It's only grade 11 math, people. Don't overthink this. We are in a spot right now where we have inflation because of credit inflation. So Bitcoin is actually your insurance on that credit inflation. Bitcoin might not be correlated to CPI, your consumer price index inflation, but I am 100% certain it is your best insurance against your credit inflation. And that is pure mathematics, because we have reached a point in global debt where it is growing organically faster than your economy or your tax base can possibly keep up. Don't overthink it. We have reached the point of no return. You need your appropriate insurance. So Bitcoin, 13 years old, thank God for Bitcoin, okay? It is our insurance policy against this debt spiral that, by the way, that spiral doesn't even include the new spending to protect you from the inflation they brought on in the first place. So thank goodness they're spending more money to protect you from the inflation in the UK that they brought on in the first place. This is a clown show. Protect yourself from the clown show.
Greg believes the credit system is to blame for high inflation, and Bitcoin is the only logical option to stay safe. Because of its scarcity, Bitcoin will continue to increase in value as more and more people accept it and start to join the ecosystem.
So I started my trading career in 1988. And two very important things about that. Firstly, in 1988, we had CPI inflation in the United States of about 8%. And isn't it interesting that the Fed funds rate, or the overnight rate as set by the chairman, Paul Volcker, at that time, was double digits. It was over 12% to fight 8% inflation, CPI. Well, today we have 8% CPI inflation in the US, and Fed funds rate is 3.25. Okay? They cannot possibly get back to a level that will properly fight CPI inflation, which has got to be at least 5% higher than it is today, without exploding the world. Because we can't even handle a 3.25% US Fed funds rate, and you're already seeing the cracks form in the system.
Greg says that back when he started out as a trader, the CPI was at 8%, similar to what we are seeing today, but the federal interest rates were at 12% to counter that inflation. There is no way that the Fed can get back to those levels without destroying the economy, which is what leads Greg to believe that there is no other way but to be prepared for the worst, which is a full-on financial crisis.
The great financial crisis. I was working at a hedge fund. I can promise you the world was over. Okay? I have never been so scared in my entire life as in 2008, 2009. With the caveat, with the exception of today. I'm just as scared today as I was sitting in a risk chair in 2006, 7, and 9. Okay?
Scared of what? Just to clarify. Scared of
the implosion of the financial system. Now, the Fed did what they needed to do, once again brought it to that level. The final crisis was the response to the COVID crisis in 2020, and that solidified the debt spiral as I see it. So I want you guys to take one thing away from here. I was lucky enough to find Bitcoin in 2016 as a solution to the Fiat Ponzi as I see it. The Fiat Ponzi of sitting in a risk chair, working in a credit-based world. Fiat is the Ponzi, Bitcoin is the solution. Now, I did find it when Bitcoin was trading under $1,000 per Bitcoin, US. My point to you today is Bitcoin, very simply, is a far better risk-adjusted investment today than it was when I found it in 2016. Why?
Although Greg has been through 3 major financial crises, according to him the 2008 crash was the worst, and he is equally scared in 2022. This is because the Fed seems to be ignoring all the lessons they have been taught in the past and is steadily headed towards yet another disaster.
That is written in the history books, and now the response to the clown show that we are living, where they are printing more money to solve the problems that they created by kicking the can up the capital stack to the level of sovereign debt. There's nowhere else we can kick this to, people. The countries have no choice. So, if you love somebody, tell them to buy Bitcoin. Okay? It's that simple. When I tell you to buy Bitcoin, it's because I love you. Okay? I have 3 kids. I've done okay in my life. But I own Bitcoin for the kids. Okay? As simple as that. And you don't have to own 100% of your portfolio in Bitcoin. But please don't own 0% of your portfolio in Bitcoin.
Greg is worried because the Fed has printed way too much money in a very short amount of time, which is waiting to go off like a time bomb. Bitcoin is the only solution to keep yourself safe from this whole fiasco, and as Greg said, not having any Bitcoin exposure is the most risky thing to do. Thank you for watching this video. Make sure to hit the like button and subscribe to our channel so you can stay up to date with the latest market news and events. See you guys in the next one.